Do you drive your personal vehicle for work purposes? Are you a business owner who doesn't want to purchase vehicles but requires employees to travel for work? In today's video, we're going to talk about Canadian car allowances. This is relevant for both business owners and employees because understanding car allowances and how to report them properly can help both parties maximize their tax benefits as well as stay compliant with Canada Revenue Agency regulations. Let's dive in. What is a car allowance? A car allowance is essentially a reimbursement for business use of a personal vehicle. This could apply to anyone from sales reps driving to visit clients to employees making deliveries for their company. It is the business's way of covering mileage or car expenses while an employee or the business owner themselves is on the road for work. It also allows businesses to reduce their taxes through a car allowance expense. There are two main types of car allowances. Number one, the per-kilometer allowance. Number two, the fixed vehicle allowance. These two methods of calculating a car allowance each come with different tax implications for the employee and for the business. So it's important to understand which works best for each situation. Let's start with the per-kilometer allowance. This is based on how many kilometers you drive for work. The CRA mileage rates for 2024 are 70 cents for the first 5,000 kilometers and 64 cents for every kilometer after that. For 2023, it was slightly lower at 68 cents for the first 5,000 kilometers and 62 cents after. So make sure to check these rates each year before making your calculation. The best part of this method is that it's tax-free. The business can claim its entire amount as a deduction, and you don't have to report it as income. Now, the other option is the fixed vehicle allowance. This is where the business gives an employee a set amount each month to cover vehicle expenses. However, there's a catch. This amount is considered taxable income for the driver, so it needs to be reported on an individual's T4 slip. But the advantage here is that you can claim actual vehicle expenses like gas, insurance, maintenance, and even lease payments on your personal tax return. These expenses are prorated based on how much you use your vehicle for business versus personal purposes. So how do you choose which method to go with? It all depends on your situation. Let's go over a couple of scenarios to show how this plays out. Scenario 1. Carl drives 18,000 kilometers annually for business, 90%, and 2,000 kilometers for personal use, 10%. His annual vehicle expense, maintenance, lease, etc. is $30,000. Under the per-kilometer method, Carl receives a car allowance of $11,820, which does not need to be reported as additional income when he files his personal tax return. The business can also claim $11,820 as a deductible expense. Under the fixed allowance method, let's say the business pays Carl $1,000 per month as the fixed amount instead of a per-kilometer allowance. The car allowance for the year would be $12,000. Carl can only claim 90% of his vehicle expenses, totaling $30,000 because that's how much was used for business purposes. With a 40% tax rate, Carl would receive a personal tax refund of $6,000. The business can claim a tax deduction for a vehicle allowance of $12,000. Comparison between per-kilometer allowance and fixed allowance. Comparing the two methods, Carl is better off receiving a fixed allowance than a per-kilometer allowance. The total cash received by Carl under the per-kilometer allowance is $11,800 compared to $18,000 under the fixed allowance method. It's typically up to the business owner which method they will use, but employees may negotiate this if they are savvy with numbers. Car allowance tracking. Whichever method you choose, keeping accurate records is key. Employees and/or their employers will need to track the kilometers driven for business and for personal use. And if you go with the fixed vehicle allowance, make sure to save all your receipts for things like gas and maintenance. The CRA won't accept just credit card statements. You need those detailed receipts. There are new softwares out there that track mileage, so find out the one that suits the business owner and employee to make sure accurate records are kept. So whether you're an employee or a business owner, deciding between the per-kilometer or fixed vehicle allowance depends on your driving habits and tax situation. Both those options can offer significant benefits, but it's all about knowing which one works best for you. If you have any questions, feel free to reach out for more information, and I'll be happy to help guide you through it. You can contact us through our website, which is listed in the description below. Thanks for watching, and please like and subscribe for more tax tips.